Hey folks, welcome to the Rate Update with Dan Frio. It's our live event, Thirsty Thursday. I don't know if I only got water. I don't know. Nico might have some beers on him. But what we want to talk about today is down payment and the lack of, basically. So most of the time, why a lot of people can't buy a house is lack of down payment. Okay, so what we want to discuss first is I'm going to go over each program. There's only a handful of programs out there. And then how much of a down payment you need, if any. And then we're going to go over down payment assistance programs, the good, the bad, and the absolutely ones to completely avoid. Okay, so then I just also created an ebook I'm going to share with everybody. I'll give you the link. It'll be down in the description below. You can get a copy of the down payment assistance programs for every state in the whole country that I was able to find and put this together over the last several months. So the agenda today is right now, like I said, down payment assistance or the lack of a down payment. So let's first start out by going over each program and explaining how much of a down payment is needed. And then there's more to that equation, though. And then we'll start off and go down the avenue of the down payment assistance programs. So just so you guys know, you do not need 20% down payment. Okay, there's still misinformation out there. A lot of people still think they need 20% down. Okay, that is not the facts. All right, so let's go through this. If you're a veteran, God bless you. Thank you for your services. Zero down. Okay, but even if it's zero down, such as USDA, so we have USDA and VA, 0% down. All right. However, let me start off by this. Just because there's no down payment needed doesn't mean you don't need any money. Okay, so once we finish this, I'll go through the down payment piece of things. I'm also going to go through some common costs that you're going to have on a loan if you're buying a house. And we're going to break those down so you at least get an idea how much that money is going to be as well. So let's go through the top agenda. VA and USDA, you don't need any money down, period. None. Okay, none. If you're looking in a USDA, I'll post down below in the video description as well. Links to you can go to the USDA websites to see if the property you're looking at is USDA zoned. And also, does your income qualify you for the USDA program? But if you're a veteran, like I said, God bless you. As long as you have your DD 214 and your papers, you'll be able to go with a VA loan. All right. Then the next piece of the puzzle is conventional loans. There's Fannie Mae and Freddie Mac. You don't need to know that. But if you're a first-time home buyer or have not owned a house in the last 3 years, you can get away with 3% down. Got to get this in the screen. So 3% down if you're looking for a conventional loan and you're a first-time home buyer or pretty close to a first-time home buyer. It's as long as you haven't had a mortgage in the last 3 years, you should qualify for that. Otherwise, it's 5% down. Okay. And then there's FHA. FHA requires 3.5% down. All right. So that's the down payment programs that you're looking at. Now, the other pieces of the puzzle, how much more money or additional money you would need. So let's say you take the down payment piece. Let's just throw that out the door. All right. Now there's different buckets of costs that you're going to have. So the first puzzle is the lender fees. Are there any lender fees? A lot of lenders have a doc prep fee, an underwriting fee, a processing fee, an admin fee, and a whole bunch of other things. But that's irrelevant right now. But we want to talk about that, or at least figure out how much is the lender fees. In our case, the only cost you have is a processing fee for $8.95. That's it. There's no lender fee. There's no underwriting. There's nothing. Okay, so it's an $8.95 processing fee. Next piece of the equation is your cost involved in the transaction. So meaning you're going to have an appraisal, but you're going to pay for that when the appraisal's ordered. And then you're going to have a credit report fee and a flood cert fee and a couple other fees. Those actually come to maybe a couple $100. Now, here's the area that really adds up, the title fees, okay? It's title insurance. Let me explain what title insurance is for you. It's required on all mortgages, all right? It's not optional. You need to get title insurance. Your title insurance actually insures you and the lender that once you buy, the day you sign on that dotted line and buy the property, nothing in the past can come and haunt you. Okay. So everybody's taking out an insurance policy to say, from this day forward, we know what we got. We got one lien on our property. The lien is with Dan or whatever. And that's it. There's no other things in the background, such as, let's say the person you bought the house from put a roof on last year and they never paid them. And now you buy the property, you move in, and a year later somebody's knocking on your door, and you check the door, and the guy's out there saying, "Hey, Dan, hey, Mr. Homeowner, you owe us $15,000 for that roof. You never paid us." It's like, dude, I didn't even own the property. So what happens in that case is we file an insurance claim. The title insurance company has to make that person whole. Same thing with any liens, same things with any judgments, same things with any real estate taxes. So the day you buy that home, you don't have to worry about anything in the past. Okay, that's title insurance. Some states are pretty cheap. Some states are very expensive. So let's just use a rule of thumb right here of saying you're going to need, let's say, between $3,000 and $4,000 for title. Okay, so let's start out. Your lender fees might come to $1,000. All right, then the other miscellaneous fees really aren't going to add up to anything, and then you have title for say $3,000. So that's $4,000 more that you possibly could need. So you need the down payment plus an extra say $4,000 to $5,000. Okay, so if you don't have that, don't fret. That's what we're talking about today. So there's a lot of down payment programs, and Nico is basically the point person in our office where people go to figure out where, which program do I fit in, because I'm going to share a link with you, and I'm going to show you this here right now. There's basically an ebook that I put together over the past several months, and it goes over every down payment assistance program in the country, state by state by state. Yes, it took a long time and a lot of effort. What I'm going to do down in the description below, once we're done and this is over with, I'm going to give you a URL or a website address that you can go to, click it, and what will happen is it'll launch this program up for you, and you'll be able to see the document on your own. Okay, so that's what we're talking about today. So if you have any questions, start asking those questions while Nico goes through the good, the bad, the ugly, and down payment assistance programs. So Nico, take it away. But what we're going to talk about, though, or what we're focusing on is there's free money, there's grant money, and then there's a lien. So take it away.
Cool. So first off, thanks guys for coming to watch us and listen to what we talk about the down payment assistance. Like Dan said, there's hundreds of down payment assistance, probably just throughout your state, and then throughout the country. So a few of the ones that we're talking about are just going to be nationwide. Again, the state ones, Dan has the URL he's going to send to you guys, so you can take a look at those. So a lot of the grant programs, they're going to give you either 3.5% to 5% back towards the purchase or towards the closing costs and down payment of the program, right? So there's a lot. And Dan, can I pause here real quick? I can't really hear myself.
You can't hear yourself. Take those off.
Yeah. Thank you.
We're live, so you can't pause.
Better for me.
So basically, what he's talking about while he's getting adjusted, the down payment assistance programs are this. They'll give you a percentage of the loan amount. So when he says 3, 4, 5, 6%, what he's talking about is, let's say you bought the house for $300,000 and you put down minimum. So you have a $280,000 lien. Okay, the 3 or 4 or 5 or 6% grant program or free money program that he's talking about is a percentage based on the loan amount. So if it's a $200,000 loan and you're getting a 4% grant or down payment assistance program, you're going to get $8,000. All right, so that's what he's talking about when he says 3, 4, 5, 6%. But you don't get all that money in most cases. In a lot of cases, you'd hardly get any of that money. So that's what we're talking. That's what we want to really, really focus in on is, can we get you free money that once you walk out of the closing, there's no strings attached. So go ahead. You all situated? Nico. Is he there? Okay, you can't. Okay. So here I'll start talking about it. So the down payment assistance programs, there's 1 or 2 nationally that we use. So what happens is there's thousands of them out there, but there's 2 that we work with. And what it is basically is, once you get into the loan, or once we do that loan for you, it is free money. You walk out of the closing, there's no encumbrances, there's nothing involved in that. So you walk out of the closing and it's basically free money. The only caveat behind that is you have to have or keep that loan for 6 months. Once 6 months comes out, we will probably reach out to you to possibly refinance if the terms are right. So here's the down payment assistance programs, what they normally consist of. It's a lien on the property sometimes, not always. But I'm trying to explain this to make it. There's grant money, there's liens, and there's free money. Okay, think of it that way. So they all come with a higher rate and a lot of costs. Okay, so in those cases, where we want to divert you to is the one that's free. So let's take a hypothetical example. I don't know if are you
I'm back
accessible
on.
again?
Can you hear me?
Yeah.
Cool. Yeah,
You're
I'm
there?
back on. I'm sorry. I was
Okay.
echoing. I couldn't even.
Got
I
it.
couldn't
Okay.
talk.
Well, go take it over and tell them basically the good, the bad, the ugly.
Yeah. So, all right, cool, guys. I apologize about that. So, a lot of grants out there. There's hundreds, not thousands, that you guys can find. Here's the thing, though. There's only a few grants out there that actually make sense to use, right? I don't know what Dan was saying before, but so there's some grants that are actually free money that are great to use, which we have available. There's other ones that are silent seconds, others that are second mortgages, and then others, I think those are the only two options, right? Some of them you have to pay back. Some of them you don't have to pay back. So that's just kind of an overview of it, right? So one of the grant programs we have, and Dan, is it cool if I get into one of them?
Yep, go for it.
Awesome. So one of the programs we have, they're going to give you 3.5% for the down payment back to you at closing. Not only are they going to give you that, they're going to give you another additional 3% for all your other closing costs that are related, like Dan was talking about in the beginning. You're going to have maybe $3,000 to $4,000 in title fees, right? So they're going to help you with the down payment and then an additional 3% for closing costs. With this program, this grant is the money is forgivable right at closing. Well, most of the other programs, you have to wait 3 to 5 years before they're forgivable, right? So you're still on the hook for it. Meaning, if you're still on the hook for it, if you sell or if you refinance in that time, you got to pay part of that money back, right? So this program we have is probably the best one out there. There's no repayment. It's forgivable right at closing. And you can refinance into, let's just say, a conventional loan within 7 months. You got to wait 7 payments, 6 payments. Within that 7th month, we'll be able to refinance you guys into a standard product. So again, this is one of the best ones we have available because it is truly free money. It is free money. Again, and the reason I say it's free money, maybe we can even share the sheet that we guys made for you. You're truly getting the 3.5% and then 3% in closing cost fees.
Are you talking about this one?
It was we'll recreate it kind of more customer friendly and then maybe resend it out to everyone.
Okay.
Or maybe repost it later. But so let's just kind of review another grant program, right? They'll give you maybe 3 to 5% back of the loan amount to help you guys with closing costs and down payment. It's a silent second mortgage. It's a 0%.
What?
So again, it's a second lien on your house, right? So you're going to have your first mortgage and then you have a second lien on that home. So again, this loan is going to be forgivable after 5 years, meaning if you refinance or sell the home within 5 years, part of that money is you got to pay back. So again, but on that silent second, there's no payments. It's forgivable after 5 years. But here's the thing. They're going to make us charge you 2 points up front. So 2% of the loan amount, we're going to have to charge you up front just to use this product, right? So it makes sense if you're going to get the 5% option, you're going to get 5% back because you're left with 2%. So, I mean, does it make sense? Maybe if we're really in that bind, yeah, that 2% is going to help us out. But so again, it's kind of, It's a little glass of mirrors. Is that the saying, or what is that? Smoke and
Yeah,
mirrors.
it's just that's basically the most of the programs out there, and that's the frustrating part. Let me recap it real quick. So what happens is in most of these down payment assistance programs, you'll get about 3 to 5% of the loan amount. Okay. However, there's costs involved that they're going to take out. Let's say you're getting 5% of the purchase price. All right. There's a 2% charge to get that. All right. That leaves you 3. Then there's going to be at least probably $1,200 from the grant company that's going to be charged. That might take another 1. Okay. So now you're left with 2% of the purchase price is a grant, which can be good. But the bad thing is the grant, most if not all these programs come with a higher rate. Okay. So then you think about it, is getting 2% of, a $200,000 loan. So you get $4,000 worth paying a rate that's maybe 1/4 to 0.5% higher for the duration of the term. So let's go down this avenue. If you take that loan and you go to refinance it a year or two down the road, the loan that has that built in, you still have to pay all that money back, and you didn't even get all that money. So that's the norm out there. That's the majority of the down payment assistance programs out there. They'll give you 3 to 5% of the loan amount. Then they'll take about 3 of that back, 2 on the 3% grant and 3 on the 5% grant, only leaving you about 1 or 2% of money in your pocket. And again, you're going to pay for that in multiples over the duration of the loan. And then if you go to refinance or you sell the house, that amount is prorated on like 1/60th. So you're still going to owe a huge chunk of that money back. Why would you do that? So the program we want to talk about is there's one out there. It's free money. Okay. It's free money to you. There's no strings attached. So we set you up with that program. You get the money. All right. After 6 or 7 payments, we revisit this. The rate on that, I think, is about 1/4 to 3/8 higher. Okay. But we don't know where rates are going to be 6 months after you close. So 6 months after we close, we get back with you and say, okay, where are you right now? And we're going to check the rates. So if you're in an FHA loan, you might be able to now go to a conventional loan and completely drop your PMI. Are you in a position, because with the house appreciation that's going on right now, 6, 7, 8 months might put you into a term that you could avoid PMI. But let's say the rates stay the same. Well, just keep what you got. Okay, you got free money. Let's say if rates went down, we refinance you at the lower rate and you don't have to pay that money back. If rates go up, you're in good shape. You got free money and there was no strings attached. So that's why we wanted to present this today. It's really confusing. And I'm sorry, we're all over the map here, but you're going to see, I posted this, I'll be, again, down below, there's going to be a URL that you can go to and find every down payment assistance program throughout the whole country in every state. Okay, we have access to probably, let's say, half of them. A lot of them we don't have access to because it might just be you as the consumer has to go there. But we reference this and we can say to you guys, hey, call this place and see if you qualify and so forth. Then we can work with them after the fact. But we just want to come out there and say, guys, the biggest point of this video was a lot of people thinks they need 20% down and they don't. I have conversations with those people every day that says, once I get to 20% down, I'll be able to buy a house. And it's like, no, you don't need that. That's 1. 2, I don't want you guys signing on the dotted line where basically you're financing a higher rate. You're financing more money in hopes of getting all that money as a down payment assistance. And you're left with a fraction of the money. It's not a prudent financial decision. Okay. So again, there's one out there. And to find that out, call us, okay? There's a lot of lenders in the country that have access to this. There's a lot of them that don't even know about it, okay? So that's why we're trying to keep this a hidden gem. Hate to say it that way. So if you're a realtor out there and you need this program, call us. It's probably not one that you've heard of. If you're a consumer out there and you're like, hey, what is this? Please call us. Okay. I'm not trying. Yeah, I'm dangling that carrot in front of you. We'll be more than happy when you call to discuss it with you. And then if you have somebody in the mortgage business, a relative or whatever, we can even talk to them about it and tell them about it. But that's where the due diligence is as a loan officer. You need to know what you're doing. Okay. You need to know what you're talking about. and education is the key. And that's the main reason I have these YouTube lives. I do YouTube is the foundation of this was to inform people on their credit. And then it evolved into the mortgage website. So Nico's the point person in the office to handles these. Very often he'll come in my office and he's beating his head against the wall. He's like, these don't make any sense. And I'm like, I know. And then when the consumer calls in and we talk to you about it, normally those people, we're transparent with all this stuff. We tell you what's going on. We want to explain to you the good, the bad, the ugly. Okay, so that's that part of it. Okay, so let's go
Dan,
on.
real quick.
Yes,
Quick. So the nice thing about this program too is you don't have to be just a first-time buyer. If you're a military veteran, first responder, a school teacher, civil servant for national or state, local, you can still use this program even if you're not a first-time buyer. If you already own a house, you can still use this program.
Perfect.
So
that's, guys,
cool.
the whole gist of it. We're not going to go through every program out there because there's 35 that we just have in the state of Illinois that we know of. I'm not going to go over any of them with you, really, because they're not worth it. So if you're going to get a down payment assistance program, all I ask you to do is please, please, please read the dotted lines. If you're with a lender right now and they're offering it to you, please, I would love for you to send me the documentation. Let me read through there and explain to you what you're getting into. If you still want what it's offering, God bless you, take it. Okay, take it. But so let's start answering some of the questions. But so how about I read them and then you answer some and then we'll flip flop back and forth. Okay, how much money? Is there a cap on is there a particular cap on the forgivable loan? I don't think there is, as long as it's a conventional
Well, so again, it's an FHA product.
Okay.
So it's 3.5% for the down payment, and then it's 3% of the closing cost. So again, I don't think there is a cap. I didn't.
No, there is not. As long as it meets the FHA guidelines, and there is, it is state by state specific in a lot of these cases, where some areas of the country like San Diego and New York and things like that, they have higher loan limits on FHA than most of the country. But let's say the loan limit is $400,000 and you can get 3%. That's $12,000. $12,000. Okay, that's a lot of money. So thank you so much for that question. I got to put my cheaters on and start getting in here. So guys, if you're watching, please ask any questions that you have. This one was kind of, I threw it in here just to show a lot of people that you don't need 20% down and to be very, very, very careful when you are looking at down payment assistance programs. Hello, what about DACA recipients? We do have, you should be able to qualify as long as it's FHA, your FHA approved. But DACA, we do have I-10 loans. We have DACA programs. So if you're in that realm, I'm going to say this honestly, the best way to do this is to call us. And the number is, I'll show that number down below. Guys, I've been doing this for a long time. So when I do this, I'm not trying to, have you call us and we strong arm you. It's basically just fact finding. Our goal for you guys is to educate and inform you guys so you're an informed consumer. Okay, so you don't get hosed like so many people are. So down below, there's our website and our phone number. Please, call in if you have any questions in regards to that. But again, down payment, it prohibits a lot of people. Let's say, for example, you have a millennial that's down in Chicago. Rents are $3,000 a month. You make 60, 70, 80,000 bucks. You got your rent payment, you got your utility payments, you got a student loan payment and a car payment. You can't save any money. You can't. So this is a program where it can get your foot in the door. But what you don't want to do is basically sell your soul to get some money for a down payment, and then you're paying on it forever, or you're paying that money back in multiples. So the goal here, like we always do, throughout everything else, how do we get you the lowest rate, the lowest fees, and the best program in the industry? By informing our viewers. So that's why we're doing this. So if you have it, so that could be the end of the down payment assistance programs, unless you guys start posting some questions. But let's just open it up for anybody out there that it just has any basic questions. Like today, rates went up almost 1/8 of a point just this afternoon. So yesterday, what happened with rates is about 1 o'clock. I yelled out in the all over the floor, lock them if you got them. And that's basically exactly what I say. And we locked everybody in yesterday. We had some stragglers that didn't make up their minds. There are some clients this morning I actually locked while they were thinking about it, because I'm like, well, once you wait, today again, between today and yesterday's drop, I mean, you're probably looking at almost 0.25% in rates. So if I can save you 0.25% rate, that's what our goal is. Okay, that's what our goal is. So let's go to the next question. You want to read these, and I'll just
yeah, I got you.
I'll answer.
What about going from self-employed 1099 to W-2? I've been self-employed for 6 years. I just the LLC structure to, I think he's meant, I just changed the LLC structure to S Corp. So now I'm employed W-2 by my company.
I got an argument with a buddy of mine, and I get what you're saying. I get it. However, you're still self-employed. Okay. You own the company. And my buddy was like, I don't own the company. It's a corporation. Well, who owns the corporation? You do. So when it all comes down to it, you own the corporation. So what we could do in your case, we can actually analyze your tax returns for the last 2 years. That's a way to do it. I don't know what kind of program you're looking for. I just changed. So that's fine. So what we would do is we would review your tax returns for the past 2 years and use those. And then we just show that you changed from an LLC to an S Corp, and we can show that paperwork that you're still the entity behind it all. I own 2 other companies as well. I'm the owner on paper in the background. But in this business, you got to look at it. Who is ultimately everything funneled to? And again, I had a huge argument with a good friend of mine. You're still the owner of that company, okay, when it all comes down to it. So unfortunately, that's how lending works in this area. But we can analyze your tax returns over the last 2 years. There's a lot of tricks to the trade when it comes to tax returns. You can add back depreciation and a whole bunch of other things. That's what I do probably at least one day a week, as I'm going through all the tax returns for all the loan officers in the office. I'm breaking down rentals, self-employed income, and a whole bunch of other things. So that's where we can guide you through that platform.
And
so
I will
great
say
question. Appreciate it.
For self-employed too is, before joining your team, Dan, and you teaching me how to read self-employed tax returns, that's why you need to find a good loan officer, because if you are self-employed and you might not get an experience or someone that knows how to read business tax returns, they might not say you qualify when someone like Dan, because again, all self-employed borrowers, I'll review it. I'll bring it to Dan, see what he thinks so he can review it. But again, you're going to want someone to know exactly what the underwriters are going to look for and deduct or add back in. So that's why you're going to really want to make sure you're with someone that knows what's going on.
Here's the flip-flop of that. Let's say they looked at the taxes and they're like, oh, we can use, like some people think, we have a lot of truck drivers and their gross receivables might be $1 million and their net profit might be 50 grand. So a lot of inexperienced loan officers, I've seen it personally, go off the $1 million and they're like, this guy, his debt ratio is basically 0. And then it gets turned down. It comes to me and I'm like, dude, what were you using? $1 million. I'm like, are you nuts? So those are areas that we can fill in the voids for you. So great. Alvarado Energy. Hey, that's a company. So, and you're the company. So I greatly appreciate that. So you just changed, but we should be able to help you. There is also what's called non-QM. It's the new, and I hate this word, it's the new subprime kind of, but it's the subprime loans were good when they initially started, and then they just went really bad. Okay. So the new kind of package deal that a lot of companies are coming out with right now is called non-QM. They're basically make sense loans, but they require skin in the game. You have to have good credit scores, and you have to have skin in the game, meaning money for the down payment or money. Let's say, for example, you can use, in some cases, you only need 3 or 5% as a down payment. Well, if you go with this non-QM programs, you might need 15 or 20%. But in those packages, they also have stated income. Okay, especially for self-employed borrowers, you might be able to get away with bank statement programs. You might be able to get away with the stated income programs. You might be able to get away with asset depletion. We have people that come in and they're millionaires on Bitcoin. Okay. So there's a whole variety of income that comes in these days that a lot of people don't understand. I had my nephew come to me and he's like, you won't understand how I make money. I mine Bitcoin. And I'm like, you mine Bitcoin? That doesn't make any sense because you have to have a bunch of money in the game. He's like, well, I actually stake it and I make like 50 grand a year on staking it. I'm like, oh, I know exactly what staking is. So we're more informed than you think we are in regards to all this. But I greatly appreciate the questions. If anybody has any down payment assistance questions, please ask. If you have any questions in regards to down payment, please ask. The one that we got to start covering is the extended locks. Okay, let me talk about those briefly. Hopefully that triggers in some questions for you guys out there. If you're building a house and the builder comes back to you and says, if you use our lender, we'll give you $5,000. I go through all this all the time. But the biggest drawback in that area is they won't allow you, in almost all cases, they will not allow you to lock until you're about 45 days from actually moving into the property. Well, that could be 6 months from now. If you wait another 6 months, now I'm not saying the rates are going to do this, but if you waited from January to today, you could have got 3.25. Well, if you waited till today, it's 5.25. So will it go to 7.25? I don't think so. And that's not my prediction. And I'm not trying to fearmonger you guys, but you should do something. So a lot of the extended programs that we have, especially out to 180 days, and I got a special offer for you guys on this one as well. We now have a 180-day extended lock. So if you have the property and you're building it or whatever, you're rehabbing it or something like that, we can actually lock in that rate for 180 days. Let me throw this one at you. Wonder if you're like, hey, I'm still shopping, but these rates are scaring the bejesus out of me, and I really like to do something. Wonder if we can offer you a 180-day lock on a property you haven't even found yet. It's called the lock and shop. Okay, we can now do that up to 180 days, lock you in for half a year basically, while you're looking to find that house. Okay, so that's unheard of. And a lot of people were saying, I don't need it or whatever. Well, I heard this same story back in January, and the people that we did the extended locks on back there are now calling on a daily basis, thanking us. We have several people closing this month. They're in about the 3 to 3.25 range. If they would have waited, they're going to look at 5.25 range. So that's just a little caveat there. So, but please, guys, we have a lot of people online right now. Please ask any questions that you might have. Nico, anything that's kind of that you're seeing consistently this week that we might be able to inform people about?
Again, I'm seeing a lot of the extended rates or the lock and shop. I mean, I have a great story at lock and shop with one of my best friends. I mean, he was, they were looking for a home. They were thinking about maybe building. Then they were like, nah, we're not going to build. We're going to look for an existing house. I'm like, all right, well, while we're looking for this, let's get this rate locked in. Right? Because they knew they were going to be within 90 days that they were going to list their condo and then get it sold. So thank goodness we got him locked in, because if we didn't, he would have been probably a full point higher than we locked him in a month ago, or probably a month and a half ago. And then it took him about 3 weeks to get us a contract. But literally within that 3 weeks, the rates probably jumped up a full point. So again, I'm so glad that we got him locked in. He's happy he's locked in.
We're not making this stuff up either, guys. If you follow us on YouTube, you see I posted. Let me know if you're commenting here, and maybe not in regards to the YouTube live. Let me know how you guys think my live broadcasts are throughout the day that I'm trying to do in like a 4 or 5 minute time span. When I'm seeing the markets really move dramatically, I'm trying to do a live real quick to show you my screens on what's going on, how a lot of lenders are repricing and so forth. So if you guys would at least post a comment there, you like it or you don't like it. So let me know things like that. Other than that is all I really got. This was a topic that is, I didn't know how much traction we would get on this, because a lot of people do have the money these days. A lot of people are still continuing to shop for mortgages, but I can't believe how many people are building. And it is, and they're scared. And that's what we're trying to do. We're trying to reach out to everybody just to say, hey guys, instead of jumping out a window, please, call us, at least get some advice. Okay. So that's that part of it. So if there's no other, I know it's a Thursday night, it's a long holiday weekend. A lot of people might be going on vacation and so forth. The market's closed early. If you don't have any more comments, we could call it a night. Last week we had a 2-hour event. This one is about 35 minutes, which is fine. There's not a lot of traction in the down payment assistance program piece. So if that's
because the markets are closed, though, guys, your boy will be working all weekend if you guys need me. If you need run numbers or anything like that, pre-approvals, run some housing payments. You guys want to check where rates are, where the market's at. Again, if the market's closed, but again, we can still run numbers for you guys. I'll be here for you guys if you need anything.
I have my subscriber he joined the events. So Sumit, thank you so much. You popped up on this. I will be Zooming you. If you want to do any Zoom calls, I just started if you check down the description down below, I just started a membership for those that really want to dig into this environment. If you're a realtor, I'd highly suggest you do it. If you're a mortgage originator, I won't say you're my competition. I want you guys to learn so we can help the industry. So this is why I actually posted. I created the membership piece so we can do Zoom events. We can do YouTube lives, just the group, and it'll be a group setting that you should feel comfortable with asking any questions that you might have. No questions are stupid. It's a moving pendulum on this on a daily basis in the mortgage environment. And if you're new to the mortgage industry, with the rates coming out, going like this on a daily basis, it's tough. Okay, so let's start checking. We got more and more people starting to post here. So happy Easter. Happy Easter to you too, man. Greatly appreciate. Great. Thank you for the membership. I promise you it'll be worth it. I promise you.
One more down, Dan.
Right now. Okay. Oh, you go. Or I can answer it if you want to read it.
Yeah, I gotcha. Choosing to use a DPA or not. Option 1. DPA, $8,000, but have to live in home for 10 years to be forgiven. Only about $6,100 after government fees. So I'm thinking about $6,100 in the credit. I plan to pay 3% down, so around $4,000 to $5,000, depending on.
I don't know the question.
Yeah, are you asking?
Pretty Cat, ask the question that let me try to dissect it. Choosing to use down payment or not. Option 1. Oh, I think you're telling us. Option 1 is $8,000, live in the house for 10 years, only about $6,100 after government fees. Okay, I plan to pay 3% down, so around 4 to 5, depending on, the biggest thing I would ask you there is what's the rate? So it looks like based on the fees and everything, they're charging you about $2,000 to get that. Here, let me give you some ideas. And it depends. That's going to be on there for 10 years, so you're going to have to pay it back. How much higher is the rate than a normal rate? Okay, so let's say the rate's 0.5% higher. Could you possibly get a gift funds? Can you maybe take out of a retirement account? Could you ask mom and dad to give you a gift, just and pay them back? Because once you buy the house, you probably won't have a mortgage payment for a month or two. Once you get your tax refund back, pay them back on that, but get a gift. These are ideas we try to come up with for you, because let's say the rate's 0.5% higher than the norm, and that's going to give you a payment that's $100 higher than what you otherwise would have had. So in a year, it's $1,200 more. Let's say it might even be more than that, because if you're getting 3%, you're getting $8,000, so $250,000 loan. Say it might be $150 a month extra you would be paying because of the rate differential. It's $1,800 a year, so you're really picking up. In a year or two, you'd be back to square one. But you're still going to owe that money back, and I can almost assure you. Most loans throughout history have only lasted for 7 years. So for you to be there 10 years, you got to look at it as you're going to have to pay all that money back. So you're probably going to have to pay back the $8,000 when you only got $6,000 in your hand, and you're going to pay that back in multiples over the years. So what you might even want to do is give us a call. We're actually going to be working tomorrow. So if you want to give us a call, the 800 number down below, we'd be more than happy to dissect and let you know if you would qualify for the program that is forgivable. So what you do is you take that program, take the free money. After 6 months or after 6 payments, we reevaluate things because there's no strings attached. You don't have to worry about the 10-year term. So after 6, 7 months, if rates are stable, keep with what you got. But rates are going to come down eventually. Okay, the economy is going to start to go teeter a little bit. I'm not saying house prices are going down because the demand is still huge. But let's say 6 months to a year from now, rates ease down a little bit. Well, if you take the loan that you just predicted, you're stuck. You're going to have to pay all that money back. Well, if you take the one that's forgiven, refinance, and that money was free, okay, that's what we're trying to do. So more and more people asking questions prompts us to dig a little deeper. So please, guys, if you're on this, if you're watching, ask the questions. I'm assuming that's why you're here, and that's why we do this on a Thursday night. Okay, Nico.
Yeah, I gotcha. All right. Dan, I got a story too for you guys after you answer this one. Would you say a DPA programs are a good tool when you don't have enough cash to cover the down payment and closing costs?
I'll answer. Yes. But why I say that reluctantly, do you have another way to get that money? Okay. Again, what I want, I can't strive enough. It comes with a higher rate and additional fees. Okay. And like we just saw on Breedy Cat, it's an $8,000 grant that he's going to net $6,100. So let's just round it to $6,000. Okay. I know it's $100, but that's $2,000 that just went poof. Okay. And it's there for 10 years. So if you sell or refinance in 10 years, where I can almost promise you you're going to go owe $8,000 back, and you only got $6,000 first. Then you're going to pay a higher rate, which let's say it's $150 a month. That's $1,800 a year. So you're paying almost $2,000 a year extra. You get my point. It's expensive. Okay. So are there other options? Can you get a gift? Can you get your tax refund? Can you get something other
let
than
me
that?
throw one more option too, Dan.
Go ahead.
If that's okay.
Yeah.
All right. So again, because this is another story that just happened a couple weeks ago. Alan's Dan's sales manager, my manager. So the down payment assistance. So we were trying to put our clients into a down payment assistance program. It didn't work out for them. So instead of us just, killing the deal, right, and not thinking of anything, what we came up with, we were able to get them the same interest rate that they were going to get with the down payment program. And we were able to give them lender credits. It was, I think, maybe about $1,000 less than down payment program, but they were able to get the gift. I'm sorry. They were supposed to get, they were going to get all the lender credits from us with the same interest rate. They can refinance at any time. They can pay it off. There's no second lien. And there's no extra fees or anything that's involved. So it's a standard loan. We're going to give you a little bit of a higher interest rate with the lender credit, but there's no other add-ons like
there's no strings attached to it.
Yes.
Right.
Yes.
So here's how interest rates work. Let me explain this piece of it. So let's say, for example, the going rate today is 5. All right. But how we used to make money, it's a secret. We used to, whatever rate we could sell you at, this is pre-world blowing up, we'd make a lot of money. So if let's say our rate was 4% and I sold you 5, I'd make a ton of money. It's like cars. We were references, basically the used car people of the mortgage business. Okay. The Dodd-Frank bill, when that came in place in 2008, between 2008 and 10, that basically said, you guys can't do that anymore. Okay. You can make X amount from the lender as a broker fee or for a finder's fee, I guess, put it that way. But you can't upsell the rate and make more money. So what happens is, let's say today's rate is 5. Well, if we give you 5.25, you might get a 0.5% of the loan amount back as a credit. Okay. So let's say it's a $100,000 loan. You get a 0.5 point, which is $500. Okay. Might not be much, but you get up to 2, 3, 400,000, it could come into play. All right. I'm just saying that those denominations. So let's say we drive it up and you get a 0.5 point. Let's say we drive it up enough, you get a whole point. meaning 1% of the loan amount. $250,000 loan, you're going to get $250 or $2,500. That might fill in the gap. Okay. So then what we could do with that is there's no strings attached. You have that higher rate. So then after 6 payments, 7 payments, 8 payments go on, we'll monitor all this for you in a lot of the systems that we have. Then we'll reach out to you and say, hey, you know what? You're able to refinance at this point at a lower rate, and all those credits you got basically for free. It was a roundabout way to get you extra money in your pocket without going through the grant programs. Because again, the grant programs is Breedy Cat just said he applied getting $8,000, netting $6,000, and the rate's going to be higher. So Breedy Cat, if you're still on here, if you could give us maybe what the rate is or something.
He's going to live there 10 years.
I don't know. I don't know if we want to go into great detail. Call in tomorrow and talk with Nico or myself, and let's just compare what their offer is versus other options for you, and just to see if there's a better program out there for you. Okay, so that's what I would suggest there. But thank you so much for the posts and the original DPA. Okay, that's that. Anything else out there, guys? We are on 45 minutes. I allocate an hour for these, and if we go over, kudos. And if we don't take up the hour, that's fine too. I can go up and start watching either a basketball game or a hockey game. So if you have any comments, please post them now before we head off for the day. What I'd like you guys to do is, if you would, just a quick little post of, do you like my afternoons as the market's moving? Do you like my live updates that I post real quick to just let you guys know what's going on in the market? And then anybody else out there, are there any realtors out there? If you can, just post up, hey, I'm a realtor. I'd love to hear from you on that. Otherwise, if that is it for the day, if nobody wants to contribute in any of those areas, we can call it a day. We will be open. We'll be in tomorrow. Almost all the banks are closed. So here, let's see. Did post
4.9%.
It must be FHA or so forth. Breedy Cat, I'd love to be able to at least look over that for you to make sure that it is a good program for you. You might feel it's awesome, but just give us we can give you a second opinion. Let me say this, guys. When people call in, if you've ever talked to me, here's what I always say. If you can find better out there, God bless you. We are not hard sales. Okay. We basically, it's like this YouTube. We offer our advice, our services. We tell you what we can or can't do. I also tell every one of my clients, here's what I would do. Here's option A, B, and C. I'm taking B, and here's why. But you tell me what to do. You're the boss. But a lot of times I might come back and say, is there a reason for that? And sometimes we'll put people into an FHA loan. They're like, I don't want an FHA loan, and they might have a really low credit score, a really high loan to value and so forth, where their rate would be 6% on a conventional loan. We can get them 4.75 as an FHA. Well, they don't want it because it's FHA. That's not a financial prudent decision there. But again, if that's what you want to do, that's what we'll do. So if you guys have anything else, but Breedy Cat, please give us a call tomorrow. Again, we'll just review what you have. And there's probably a 90% chance we'll say, God bless you, dude. You did a great job. Keep it up. So that should do it. If there's anything else out there, please post your comment now before we get going. Because I could spend 2 hours here if you want us to, if the need is here. But if not, we can call it a day and I can head up to dinner. So that's it. I'll give you a little countdown. 5. I won't even get a countdown. So my name is Dan Frio. This is Nico. He's my top loan officer. I do the rate update every day. So check us out. Check out our YouTube channel, therateupdate.com. You can Google us. You can go to therateupdate.com as well. I said YouTube. If you go to YouTube, just go to the rate update. Google me. My name is Dan Frio. I've been doing this for 33 years. We are now the largest brokerage in the country, where our goal is to help inform you, educate you guys on everything real estate, especially finances. So God bless, guys. Thanks so much for attending. And we will not be doing Saturday. I don't think I'm going to be doing the Saturdays anymore because summer's here. I want to enjoy my weekends as well as you guys. So we're going to make this a consistent date on our Thirsty Thursdays. So I hope you come back next Thursday, 7 o'clock, same time, same place. I'll see you there. God bless, guys. Take care. Thank you, Nico, for your help. And I will see you tomorrow, buddy. Bye, guys. All right, man. Take care.